What's going on, everybody? CryptoVatsik here with another technical analysis video for you. If you enjoy this content, I would really appreciate it if you smash that like button and don't forget to subscribe to the channel. As always, nothing of what you're about to see is considered financial advice and they are just my opinions. With that said, let's get into some charts. Okay, today's video is going to be covering fetchai, and we're currently on the monthly time frame right now. It's always good to start on the higher time frame to get that clear picture. So just starting off near the bottom, clearly you can see we had our area of accumulation from July to December last year, and then our area of reaccumulation from June to September in this year. So FET clearly showing relative strength and was able to make a yearly new high, breaching our previous yearly high here. When we did that, we broke a clear area of resistance, the macro monthly breaker here, highlighted in green, which is a very bullish scenario or a bullish case. And then we came up to our current active monthly resistance. Keep in mind, we're on the monthly time frame still. So now that we got our key levels marked out, let's drop down to the weekly. Okay, as you can see, these levels are clearly being respected on the weekly time frame. We've marked out our active monthly resistance here in red, currently suppressing price at this moment. When we broke out of that prior resistance down here in green, we put in some nice consolidation here, okay, above that level, and continued the push up to our current high. So in the lower time frame, it gives us a range to work within, which I will cover in a moment. But considering the bullish price action that we're seeing right now, I think it's prudent to mark the prior highs as well as the all-time high to give us some targets to look at. So I've marked out this high here, the candle close on the weekly time frame that was from November 2021. We got these two equal highs here from September and November last year, and then we've got our all-time high after that. So really just areas of logical resistance to consider, or in other words, targets to look at. Okay, let's zoom in a little bit closer on the current price action because there's some key things to really look at closer here. So as I said, we clearly have bullish price action here out of our accumulation ranges. We've broken high time frame resistance and flipped it into support. We have technically had a nice back test of that support here in green, the monthly breaker, which sits at around 45 cents. But I consider this more of a back test rather than a retest. So I just wouldn't be surprised in the near future if we retest that level. And the reason I say that is because yes, this is a clear backtest of that level, but it's on the same leg up. What I would like to see is even if price does push higher, I would really like to see a retest of that zone on a leg down. It would be a retest of the current monthly open, which sits at just 53 cents. And it would be a retest of this prior consolidation range that we had formed here, okay? And then clearly it would also be a retest of these prior highs and this high over here that we had back in April 22. So just something to consider for the near future, and would also be a great opportunity to load up for the long term, in my opinion. But let's drop down to the daily to look at some scenarios that might happen first. Okay, so we've got clearly here, again, the breaker highlighted in green. We've got this prior consolidation area above that breaker level highlighted in gray. We've got the monthly resistance, active resistance highlighted in red up here. And then looking closer at the current PA, we put in a swing fail here, printing two equal highs or near equal highs, which is a bearish pattern. We had a market structure break of this trend here from all these lows here, okay? But I'll get more into that in a second. What I want to bring your attention to is the current range that we're working within, from the swing high down to our swing low. This formed our range high, our range low, and our EQ, and then I've also noted the range quarter quadrant levels right here. So back to that market structure break from all these highs here and then all these lows here, that was at our quarter quadrant range in the upper level, upper 50th percentile of the range, which is just a level to consider, okay? Nothing fancy about it, but if you look at price right now, we've lost that level currently. So from this swing high, price really tried to break out of the range and consolidate above that range high for a push further up, but it was clearly unable to do so. So in my opinion, these are simply deviations above that range high, which is fine. We come back down to the range EQ here on this current low. So it's not expected that we would break monthly resistance in red here on the first initial attempt. We want to see on the lower time frames, so we're talking daily, 12 hourly, and even 4-hour time frames, to consolidate under that resistance for a breakout, if that's the direction that you're trading is up. So keeping in mind on a high time frame that we are most likely near the top of the current bullish leg, meaning when you zoom back out to the weekly, let's go to the weekly, okay, it's not necessarily the best moment to start looking for long-term positions, long-term bullish positions, in my opinion. opinion. So if you're looking long term, I would wait for that macro correction back down towards the monthly open, back down towards the monthly breaker. But it's not to say that you can't take a intraday trade or a swing trade to a target to the upside. So there's some criteria for that, which I've just pasted here. Okay, so there's basically 3 scenarios that I see. My preferred scenario is one, which would be to monitor until the lower quadrant or lower quarter range is tested. So assuming that this SR level up here fails to reclaim, we breach this low and we continue to come down with a sell-off. We retest that quarter EQ here of our range, look for another breaker structure on the low time frame, okay, put in a low, confirm the low, target the range high as at least a take profit 1, and then I would also likely be leaving some for a take profit 2 up here at around 90 cents. And I would be putting my stop loss below the prior low here, which is the swing low of our range here from the range high, range low. So really essentially a break of the range low, which would put us back inside of this prior consolidation area here in gray. So that's scenario 1, and that's a shorter time frame swing trade. I would be cutting my positions up here entirely, given the macro leg that we've put in is around probably 90% complete in my opinion. Scenario 2 is if we reclaim the upper quarter range. So this level here, which is at about 71 cents, which is our current resistance right here, which was prior support all through this price action, but we've lost it. So the scenario for 2 is if we put in a red candle here and it does not breach this low and we're able to push back up above that EQ, quarter EQ right here, and start to confirm that reestablished SR level, that would be perfectly fine for me to take a long, anticipating a break out of the range high and again looking at 90 cents as a target, and my stop loss would be below the prior low that's been confirmed right here. This scenario still stands if we put in another new low. So if we wick down here and we quickly reclaim the EQ and then reclaim the upper quarter EQ here, that's also bullish price action. We've reclaimed the EQ on this move here, confirming this is our low, which is a nice area for a stop. And then you can target range high, these highs, or 90 cents again, as I said. If looking long term for scenario 3, personally, I would wait until the range low is retested on the daily time frame, or if monthly resistance is clearly broken. So monthly resistance up here in red, if it's clearly broken, I think that's a pretty significant move in my opinion on the high time frame, and then the odds of us retesting green down here become more and more slim in my opinion, and I don't want to be missing the boat. So I would risk on at that point, but preferably I would want to get in lower around the range low here, which is the highs of this prior consolidation that we had. And even better is if we could really dip into this region very quickly with a wick on high time frame and really retest this SR level in green, the breaker level that we had from these prior highs over here. Okay, that would be ideal for long-term load ups. It's just a matter if we get it or not. I'm not really going to cover shorting too much because you'd be fighting the trend, you'd be trading against the trend, and that's just not how I do it. So I won't really be covering it, but personally the time to have taken a short in hindsight clearly was the swing failure pattern here when we weren't able to reaffirm the range high as support, and you had this nasty wick to the upside creating these two equal highs up here. That was your trigger to go short. But again, same thing, if you're shorting, it would be a short-term trade in my opinion. You'd be targeting the EQ, the lower quarter range quadrant here, or even the range low, because your expectation is that with the trend, that price would ultimately bounce from one of those levels. So let's zoom into the 12-hour now. Okay, so as I said, the quarter quadrant in our range here is pretty significant, clearly seeing it as a visible area of resistance or support and rejecting off of it right now. So I wouldn't be surprised if we come down further and really put the test to this low. But if I see that swift reclaim of the quarter quadrant, I'd consider taking a long, but I don't want to see price start to stall out like this and just start staircasing up. It would lead me to believe that price is weakening, our relative strength is weakening, our monthly resistance in red is still significant, and I would see possibly elevator down type thing right back down to the EQ, possibly stopping you out from this prior low. What I would prefer to see is strength, meaning put in a second low, a higher low, reclaim that quarter quadrant range EQ with another leg up, putting to the test this range high. So I want to see powerful, strong white candles, much like this one here that we just had yesterday. And I want to see us put some pressure on this resistance for ultimately a reclaim or a flip of the range high as resistance into support for a continued push up. If we don't get that and we start to chop around in this region, it could really mean two things. Honestly, it could be consolidating for a move up or consolidating for a move down. It would offer a good opportunity for R&R because you'd have the ability to put your stop loss really close to the prior low. You do run the risk of just getting chopped up, but to catch, 75-80% of the move if it does break up, does provide a good opportunity. On a high time frame, if the market as a whole is near its high, meaning if we are going to put in a correction across the market, then I think, all of these levels in here pretty much don't matter. And we got to start looking at prior areas of consolidation down here. And then again, that's when I start to think that we will look at that monthly breaker in green down here as a retest zone. Because personally, even if we do get this long setup that I'm looking at, so say we come down a little bit further and we do get that opportunistic entry around the lower quarter quadrant, okay, we can stab along, reclaim the EQ, put pressure on that range high, and then we do in fact come up to our target here at 90 cents. Eventually the market's going to turn into a correction. So it's possible from that point on, we get our macro correction, which then becomes more of a long-term opportunity. But in the meantime, taking short-term swing trades from the lows to the highs on the way up is perfectly fine. Just keeping in mind that you need to stay vigilant, manage your risk, and cut those positions if that's your strategy. If this deviates much higher, if we start to really put in some serious green candles, then we just start looking further up. We start looking at $1. Let's go back to the daily. Okay, so 90 cents up here is that first target if we can break red. Red was really that initial target. It was that logical area of resistance. It was a point of breakdown from over here, but that's in hindsight. I've taken these levels on higher time frames, I think, so that's why they don't really line up very nicely. But we've got our next target up here at, as I said, 90 cents. And then these two equal highs, that sits at just over $1. And then from there on, it's just our all-time high, which is at $1.20, just under. But if you look at this, objectively, it's eventually going to be exhausted. The sell-off, will come. It's just a matter of where that sell-off occurs. So there's lots of opportunity to take it up higher. And it amazes me how prolonged moves to the upside in crypto can happen. So it might surprise us. It might push up to $1. That's fine. The theory remains the same. My criteria remains the same. And my thesis that macro correction is coming remains the same as well. It's just a matter of where that correction begins and will help determine how deep the correction goes. If it's back down to active monthly resistance that we've got currently, that would have been flipped into support, which is fair and logical. You could take that stance, or otherwise I think it's down here at that macro monthly breaker. If we complete our leg at, say, around that 90 cents level, I think it's back down to at least within that region here, within that region of gray, which I know is a fairly large region, but it's not acting as a stop loss or anything. It's more to give context as to where price from a macro sense would be attracted to versus an entry or a stop level. So, in the meantime, price is bullish. The trend is up. We are testing new resistance, which is great. We put in a new yearly high. So it is bullish for sure. No one can refute that, but just make sure you stay objective. The bull run's going to be a long period of time. There's going to be many corrections from here on out. Don't get impatient. Keep it simple. Manage your risk and trade safely, guys. Thank you all for joining. If you enjoyed this video, I would really appreciate it if you smash that like button. And if you're new, subscribe to the channel for future updates, and we'll catch you next time. Peace.